And so we believe very, very firmly that anyone can be an entrepreneur.
If you just bought and held the top 10 stocks from today and you held them for 10 years, I guarantee you'd more than double your money in the 10 years.
Wow.
Hello, everyone. Welcome again to another Wealth Within update. My name is Jim Beach of School for Startups Radio, and with me, as always, is Dale Gillham, wealthwithin.us. Dale, how you doing today? Welcome to this week's edition.
Look, I'm really excited. The market was down last week, but it showed a lot of good signs, and we're actually recording this after the close on Monday and up again today, so things are looking really, really good. They're opening up or easing some of the restrictions across the US, and they're talking about it over here in Australia, so what's not to be happy about?
All right. What are the good signs that you're seeing? What are the things in specific that you're looking at? I am afraid that the earnings are going to come out and the market's going to absolutely tank. So what are the good things you're seeing?
Well, that's what I was really afraid of a couple of weeks ago when I said earnings season's coming up. So, get ready, because I knew the market needed to come down. I know I was saying that the market would go up for 1 to 4 weeks and then come back down again. Now, it was up for a few weeks. Last week it was down because we went into earnings seasons, but earnings seasons so far hasn't been really scary, but we also need to remember that earnings season, well, the coronavirus really didn't hit us and lockdown didn't really start until March in a big way. So we're seeing the first quarter 2020 has January, February, where everything was really, really good. So earnings season hasn't been as disastrous as what I would have first thought. But to sort of give you some idea, IBM in their first quarter earnings were lower due to, or lower software sales, and their sales were down to 1.18 billion compared to 1.589 billion in the first quarter of 2019. So not a lot, but again, this is IBM, and it's not surprising because IBM's been falling for pretty much 7 years in price, and most of that time their earnings reports have not been positive. But hey, that one could be a stock to turn around, because as more people are working from home, they need computers, and obviously IBM are in that space, so it could be good. AMEX revenue's down 75%, so that's a big one. That was a big shock in the first quarter because companies just aren't spending on their AMEX cards. Everybody's at home, so they're not traveling, so a lot of revenue dropping there. But Intel, the opposite. Everyone working from home and they needed products, and their revenue was up 23% on an annualized basis, and their second quarter earnings are expected to not be quite as strong, because obviously now everybody's now working from home and got everything they need, including webcams. So I don't think they're going to be as strong, but that's still a good sign. Target, big online sales doubled over the first quarter, so that's really, really good. But they did have a little bit lower profits because of the cost increases, etc., of coping with all of this. AT&T, they just missed their analyst expectations with earnings around 42 billion instead of expected 44 billion. So advertising sales were down, loss of premium TV subscribers, and obviously lower wireless equipment sales, simply again, probably because of the coronavirus. But again, all of that, I just gave you a bit of a smattering of some positive and some negatives. Other than AMEX, nothing's too surprising, so that's pretty good. I think the second quarter earnings are going to be a hell of a lot more interesting to see, and maybe we'll get a bigger fall after those, but only time will tell.
Well, hopefully that will be baked into the market by then. We all know that the second quarter earnings should be a disaster. So if the company set expectations correctly, hopefully we can avoid the punishment. What about oil and the disaster that we're seeing there?
Yeah, you only have to look at pictures around the world. There's oil, like off the coast of Singapore, there's so many ships full of oil that have got nowhere to put it. But to me, oil prices are likely to stay low for at least another few more months, as this oversupply continues. Now, the West Texas intermediate crude oil, that fell into negative territory. I think it was down about minus $37 per barrel for the May contract, whilst the June and July contracts were still in the positive territory. And that's what people need to understand is crude oil or oil is sold in contracts or futures contracts, and eventually somebody needs to, whoever's holding that contract at the end of the contract period, which is generally the month, they get the delivery of the oil, and that's what was going on. And so with that West Texas crude oil for April, nobody could take it. That's why they were paying people to take it away, because obviously all the consumption is down, so what's normally would be going out of the holding areas is not going out of it. So that's why May and June are still up a little bit at this point in time, because what they're doing is they've reduced supply. So hopefully that'll then see some of the storage facilities start to empty out some of their stores of oil, and then obviously the new production will have somewhere to go. But you know, it is interesting play on oil at the moment, but I think it's going to be a few months before everything frees up and the production comes down to a level where it's a little bit more balanced. Obviously, if we're getting a little bit less restrictions and we're able to travel a little bit more, fuel is cheap, so we can start, when we can start traveling and driving, that'll make a huge difference to the oil supply. So that's why I'm saying maybe a couple of months. But oil really is searching for low right now, so we might see it rise in that second half of 2020.
Well, let's certainly hope that there is some consumption increases during the summer from the airlines and all of us automobile drivers. I'll tell you, the roads were crowded today here in Atlanta. We are one of the first states to open back up. And I went to Home Depot today and there was a line to get in. Home Depot's been open the entire time, but still a lot of people out there. The parking lot was full. There was, congestion at the intersections and all of that. So at least Georgia's doing our part. We may be the test case disaster here in a month, but right now we are certainly enjoying getting out. And this is amazing. I saw on television, my barber was interviewed and was giving haircuts. So we are out there finally doing all of those things. Dale, let's move on and talk about the market. I know there were some companies that you wanted to mention in particular, Bill.com, for example, and maybe I think DuPont. Tell us about Bill.com.
Yeah, Bill.com is a California-based or Silicon Valley-based company that works with small to medium-sized businesses, basically, obviously helping with invoicing, etc. It's been around since about 2006, but it only floated on the New York Stock Exchange in December. I'm liking it. I've been having a look at the charts of that, and I do so after our chat. We'll go into the chart of Bill.com, and its shares rose 15.96% last week on top of the S&P 500, and so it topped the S&P 500 stocks last week. So that was really good news, because part of it is because it was recognised on G2's best products for finance. Now, as I said, it did list in 2009, and it's a leading provider of cloud-based software that simplifies, digitises and automates complex back-office financial operations for these small to medium businesses. And I think a lot of people, we're seeing a lot of people being more entrepreneurial now, and I know we've talked a lot about this in the past off camera, about people setting up businesses. If you're setting up an online Amazon business, Facebook, eBay businesses, that you're going to need people like this Bill.com to help you in those back-end services. So I think this is one to look at and possibly one to put into your portfolio for the medium to longer term. So it does look quite nice. That said, I still would have a reasonable stop loss on it, the downside stop loss on it, just to make sure that if it does start to fall away with some negative news in the marketplace, it might go with that. But hey, it's a nice one. Dow DuPont, that was up over 9% because Dow DuPont, they make protective gowns, obviously for that personal protective equipment, and they doubled their output due to the coronavirus, and they're expecting earnings to be up. And to me, anybody in that personal protective space, we're seeing that they're not going to stop supplying those around the world, because obviously there's a lot of countries that still have a big problem with coronavirus, including the US. Australia's not so much, and obviously New Zealand's not so much, but we still need a lot of this personal protective equipment, because I even think when everything gets back to semi-normal, they're still going to be over-cautious with our medical staff and making sure they're wearing all of the gear that they need to gear if somebody's even got half a sniffle. So I think that sort of area is really, really good. Johnson & Johnson's up nearly 2%. Again, they're in that sort of space there with that personal protective gear and obviously working with our medical teams. Home Depot, as you mentioned, flat out, and Pfizer, they were both up 1% in a week, where the Dow fell nearly 2%. So, and one stage the Dow was down 5%. So both of those stocks also look very, very good. I think Home Depot will continue on. So some nice looking stocks on the marketplace right at the moment, but there's some I would still avoid. But don't get too excited. That's my, I suppose my voice at the moment is, whilst it's looking good, the worst may not be over. And I know I've said, I think 80, maybe even 90% of the total falls already happened. I'm still not convinced that the bottom's happened yet. So just be careful what you're buying.
I'm 100% certain that the bottom has not happened yet. There's just too much bad possibilities out there still. Too many negative outcomes that are still not, I think, or not discounted in the market yet. So I'm still very skittish. So what do you see for the rest of this week, Dale? Let's start to wrap it up so you can get to your company by company. What are you seeing for the rest of this week?
Well, based on last week's movement, the Dow did try to fall away, and it came right back up, closing right near where it opened for the week. And that really does tell me that we're likely to see a week up, so at least 1 week up. So I think we're probably going to see 1 to 4 weeks up at this stage, because earnings season hasn't been as bad. So I think we're going to see a little bit of a drift up, but that said, I don't think the downward move's over, so please expect at any time that it could start to fall over again. It's only going to take some bad news coming out about something, or Trump to say something that's negative for the economy, so and it will fall. It will fall in elevators. Remember, the market goes up in stairs and come down in elevators, and if it starts to go down on fear, it's going to tank pretty quickly and go below that low that we had on the 23rd of March. So just be careful. Don't go in with your whole portfolio. To just edge your way in on a few good stocks, possibly like the one I mentioned, Bill.com.
And we forgot to mention that they passed the second round of small business stimulus too, which has been very encouraging to the market. I'm certainly excited about that. And hopefully it will last longer than the first round. And of course, hopefully the Fortune 500 businesses will quit taking it. That's been, I don't know if you've been hearing about that, but it's been a big controversy here, is that publicly listed companies have been applying for and receiving some of those funds. So just a political, silly, stupid disaster for all of them, everyone who signed it. Anyway, Dale, thank you so much for being with us. Great stuff as always. And we will look forward to talking next weekend after the market hopefully goes sideways, I guess. Let's hope for that. Dale, thanks a lot.
My pleasure, mate. Always good to chat with you.
Likewise. And we'll be back next week. Remember to check out Dale at wealthwithin.us and have a great week, everybody. Take care. Bye now.
Please remember that this report is an educational tool. While Wealth Within holds an Australian financial services license, the information featured in this program is general in nature and therefore should not be relied upon. Before making any investment decisions, you should consult a licensed professional who can advise whether your investment decisions are appropriate for you. We hope that you enjoy this week's report.
Well, again, it was another interesting week on the US market, and we have seen this reporting season has been I won't say much better than what I thought it would be, but it hasn't been as bad as what I thought it would be, and it's probably to be understandable, obviously, given that the main hit of coronavirus happened in March, and the quarter was already 2 months on, and it had been doing quite well. So we haven't had that volatility that could have happened over this period of time, and the market has been a little bit more orderly when it has gone down. And we did see that the market rise as I was expecting, and as I was saying that the market could go up for 1 to 4 weeks before it starts to fall away. So it was down this last week. But let's get onto the chart, and I'll talk to you about how I think the market's going to unfold from now. And looking at that right-hand side of the chart, you can see this massive bullish bar here. It's a beautiful big bar here on the Dow for April. And if I just scratch that up, you can see how it opened. It gapped right down from the March, it gapped right down, and it's traded beautifully up. We're talking about a range of 3,529 points. So at this point in time, if we go and look at our little tools, you can see the all-time high to that low there. It's nearly back up half of what it fell, and this is really critical point here. If we're talking about here, it fell 38.4%. Now since then, if I put my tool on it again, you can see from that low through to that high, it's risen 30.54%, so it's been quite strong. But what we need to do is see it get above that sort of 24,000 point level. If it can't get through that in the near future, then it really does augur for it, the market to be falling away again, and possibly falling below the low that it had in this month here, so back in March. So what we're seeing here at the moment is 1, 2, 3 weeks up. That was a nice strong bar, but we can see it's opened here last week at 24.095, pushed right down to a low of 22.941, but closed. This is the interesting thing to me. It closed right back up at 23.775. So the close is right up near the top. Now, whilst it's not at the top, it suggests the market's not as weak at this point in time, and that the big end of town aren't seriously concerned about the market. Now, it's not saying that's not going to happen, that we might get another downward week. We could get another downward week. I'm suggesting the Dow, if we do start to see a rise through this week, then the Dow could actually go up probably maybe into mid to late May, and we could see another 1 to 4 weeks up. And then that next point there would then tell me how strong the market is. We need to see it rise up a little bit further than what it is. I'm still not discounting that the downward move has finished yet, because the market does move counter to the longer term move. So example, in a bear market, because the market still is a bear market at the moment, where we're talking about a market that's down more than 20% is a bear market, and we're still seeing that from the all-time high. The market is still down more than 20%. So what you see is a market move down, it comes back up again, and it moves back down again, it comes back up again. What we need to confirm is this upward move is not just a move in the opposite direction to the longer term move, that it's actually stopped falling and now it's the start of a new longer term move. If you're out there thinking that the market is now in a medium to longer term uptrend, then you do need to go back and look at the charts, because they're not telling me that at the moment. So I am still sitting on my hands waiting for confirmation and not speculating. But the next couple of weeks is going to be very, very interesting. But the pendulum is swinging a little bit, to me being a little bit more positive rather than negative. So let's get into some of our questions and the stocks that I've got for you for this week. Now, the first question we have today is from William, who says, from Italy. So welcome from Italy. Now, I know I've got a lot of people watching these videos from Canada and from the US, and obviously other places around the world from Italy. So tell me where you're from. I'd love to hear from where you're from. And William's asking, please, 2 weeks ago you suggested to wait and no entry in the market stocks. What do you think now? Is it better to wait again? Thank you very much. Probably my first question to you, William, is what's the rush? And this is where it's really critical question, is what is the rush? And I find a lot of people have that FOMO, fear of missing out, and there's no rush to be in this marketplace at the moment, and it's really about getting in when the time is right. William actually went on to say, thank you for your answer, because I did answer another question for him off the video. He says, I hope the Dow Jones fell until 18,000 to take new opportunities to earn. Greeting from Italy with my best compliments for your video. But it really doesn't change my view on the marketplace at this point in time. As I said, it's still a bit risky, but don't try and get in early, and it's like trying to rush in to try and grab a bargain. That's not what we need to be doing now. There's plenty of time to profit, and when the Dow is bullish again, there'll be a few years of the bullish run, and you're not missing out on anything by not being in the marketplace. All you're missing out on is being stressed. So just sit on your hands, take it easy. It'll all be over, and we'll start getting back to investing and trading properly in the coming weeks and or months. But right now we need to see confirmation before we do anything. But thanks for bringing that up. Let's go into some stocks now, and I've got a few I've wanted to talk about. As I said, was it Bill? I'll just bring that up for you. Let me just give me a few seconds. So let's go to Bill. Bill.com is interesting stock, and it was actually been around since about 2006. There's a gentleman, I think, in California that came up with this, and they're working with small to medium businesses, obviously, for invoicing and bill payments, that sort of stuff. It did float on the New York Stock Exchange back at the end of 2019. It was December 2019, and I brought this up because it's had a really good week last week, and it really came to my attention, and I'm just sort of looking for stocks that might do well. If more people are working from home, if more people are being entrepreneurial, if more people are setting up small businesses, more people are going to need online services such as this, online CRM systems, those types of services that you can just use, browser-based services that you're not taking up. You don't need massive computers and servers that for yourself, you run your business. You can just use products like this, like accounting systems, like QuickBooks or MyOb, Xero's another one that you could be using to do all your accounting. This is the sorts of software that you could be using to manage, obviously, the bills and the invoicing there. So it does look all right, and it did fall away quite heavily from that $64 high, and you can see that's the $64 high back in February, and it did fall away with the marketplace, but it has found a little bit of support over the last week. So I'm not discounting that it's going to do all right. It's fallen, as you see, 63% there. But this is one of those ones that it would have membership. So you can see there it's gone up 106% over the last week or last month and a bit from there. And we've had 1 week up, 1 week down. That's the exciting thing that I looked at. It actually tested that low, and now it's now moving up. So I'd have a good look at that for your portfolio, but keep a tight stop loss on it. But it does look quite nice. The next stock I wanted to look at was just Home Depot, because Home Depot has done very, very well during the coronavirus. Obviously, I was chatting with Jim, and he was saying Home Depot car park's just been full the last few times he's been there, and people are doing a lot of projects at home. So you can see there just from that chart, it's done beautifully well. It's now way back up here. It's closed right on its high here at it closed near its high was 212 for last week. It closed about 70 or 80 cents off that, so that does look good to me. And I do like Home Depot as a stock, and I think it will continue to work. If people continue to work from home, which I don't think is going to stop at the moment, even though they are starting to open up some of the states a little bit, I think this working from home is going to happen. It's now changed our way we work, and I think there's going to be a lot of people wanting to work from home a lot more, and I think that's all going to change the paradigm, or there's going to be a big paradigm shift. And if you're working from home, then you're going to want to set up your offices, because normal offices that people have in their home is more just paying your bills and filing things and just surfing the web and doing kids doing their homework. It's not really like an office where you can sit down and work for a whole day, and that's really the point. So I'd see people setting up more proper offices in their home that aren't just for surfing the web and paying a few bills and doing bits and pieces. I think people are going to be putting in bookshelves. They're going to be putting in all sorts of other gear, maybe electronic gear, into their offices, desk systems, all sorts of different things. And Home Depot is going to be part of that, because they'll be going to Home Depot to get the tools and the supplies they need. So I don't think this is going to end. So please have a look at Home Depot, possibly for your portfolio. Next one I looked is Amazon. You can see again, Amazon's done so exceptionally well over this period of time. It did shoot up very, very quickly 2 weeks ago. It's doing well. I expect it to give a good earnings report. And again, if people are working from home, if people are being entrepreneurial and setting up new businesses, I think Amazon will be a benefit of that. And I did mention this quite a few weeks ago with Jim. People using Amazon for drop shipping, having products coming in from nationally and internationally, and then putting them into an Amazon warehouse, and then setting up an Amazon business where they're selling product from their home. I think a lot of people would be starting to look at things like that. Next one I wanted to look at is Shopify Inc. And the stock ticker code is SHOP, actually. And again, you can see another online shopping retailer doing very, very, very well. I think it's taken off a bit hard. You might see it come back a little bit. I think it's probably gone a little bit too hard to buy right now, but keep an eye on these sorts of ones, because these are sorts of stocks that are to the future. And I think a lot more people shop more online. And to me, it really is looking at what stocks are going to be how do I say it, looking at what stocks are going to be the ones that are going to last for the long period of time. Anything to do with online information, helping people do things. We're seeing Zoom from the teleconferencing, that took off. You know, there's other services like that. You know, there's CRM services like Salesforce and others, and HubSpot that could be doing very well. Streaming services, not just Zoom, but there'll be other ones setting up. So there'll be a lot of competition there. So have a good look around, because again, as I said, I think the shift is happening right now, and look for good long-term stocks to buy and good quality stocks to buy. But thanks for sending in your questions, and thanks for watching till the end of this video. Remember, no matter where you are in the world, please tell me where you are, just to say, hey, it's Dave from Georgia, or you know, John from New York. I'd love to hear from where you're from, and if you do have a stock question or a question for me, please just stick them below. Just type your questions out there and I'll get to answering. Remember, I do these reports every week, so hit the subscribe button now and click the bell on the right of it so you know when we go live with the latest stock market report. If you're an Aussie, please don't put your Aussie stock codes down there, because they'll just get ignored. Please put them on my Australian report. But I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye. Good luck and good trading.